Hello and welcome to this Forex Preview at XM.com. I'm Maria Pachardis and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing the upcoming minutes from the Fed's latest meeting and the outlook for the dollar. So Marios, when the Fed met several weeks ago at the end of October, it cut rates for the third time this year, but signaled it will pause its easing cycle for now. Tomorrow afternoon, the Fed's meeting minutes will be released. What message are we likely to get and how might markets react?
Well, I think that the market is going to focus on something that Chairman Powell said back at that press conference. Now, Powell said that in order for us to even contemplate raising rates again, it would take a really significant move up in inflation that's persistent. Now, that was a signal that we are prepared to let the US economy run a little hot, meaning that if inflation crosses above our 2% target, we might not raise rates, we might sit back, allow that to become 2.5%, maybe 3%, and then we'll consider acting. Now, why would you want to do that as the Fed? It's all about inflation expectations. Now, inflation expectations are extremely important because they're a self-fulfilling prophecy. If people believe that future inflation will be low, that usually happens. So US inflation expectations have been declining and the Fed is looking for a way to push them back higher. A good way to do that would be to let the US economy, to let inflation rise above 2% for a period of time. And avoid, a Japan-like situation. Japan went down this low inflation expectations rabbit hole a couple of decades ago and it never really came back. So you want to avoid that as much as possible. Now, if the minutes reflect widespread support for letting the US economy run hot, that would argue for a negative reaction in the dollar, but a positive reaction in stocks.
I see. So taking all this into consideration, what's the broader outlook for the dollar?
I would say it's positive. Even if we see a setback tomorrow when the minutes are released, I think that might be temporary and that the overall outlook is bright. And the argument is really simple. There's nowhere else to hide. The US is the only game in town right now. Growth is much faster than any place else. Europe, for example, is extremely fragile. Even if it avoids a recession, growth there is almost stagnant, so you don't really want to be exposed that much to Europe. Likewise, it's a similar situation in Japan. So, there's little alternative to the US dollar right now. For this to change, I think that we would either need to see the Fed cut rates much more aggressively than it has already, or we would need to see signs for a fiscal stimulus package in Europe, mainly from Germany. Neither of this is likely to happen, at least anytime soon. The German Chancellor was on the wires yesterday saying that we have no plans to enact any giant fiscal stimulus. The Fed doesn't look like it will be cutting rates again anytime soon. So I think it's going to be a favorable period for the dollar moving forward.
Marios, thanks so much for joining me, and thanks for watching at XM.com.